Okay, good morning, ABM students. So this morning we are going to tackle the lesson 5 of your um, Fundamentals of Accountancy, Business and Management 1 journey. So this will be your lesson 5 and the first lesson for the second quarter. Okay, so welcome to our discussion this morning. So our topic is all about types of major accounts. So before we move on to the discussion proper, at the end of this discussion class, you will be able to discuss the 5 major accounts. Also, you will be able to cite examples of each type of account, and also you should be able to prepare chart of accounts. Okay, so types of major accounts. What comes into your mind when you hear the word major accounts talking about in accounting? Okay, so there is this URC. Everyone is familiar with URC, the company, right? So this one, URC, Snacks Galore. So every sari-sari store class has its colorful lineup of snacks, candies, beverages, and noodles ready for sale, right? So from the long favorite snack piatos to the Max Candy to the Sito drink and Payless Pancit Canton, a sari-sari store always has something to offer for the craving stomach. But did you know that all these brands, despite being diverse from each other, are produced by a single company? Piatos, Max, C2, Payless Pancit Canton is produced by a single company. So Universal Robina Corporation, or URC, is the first Philippine multinational, is one of the largest branded food companies in the Philippines. So while most locally known for the snack foods it manufactures, especially Jack and Jill products, it is engaged in an even wider range of food-related businesses. It includes manufacture and distribution of branded consumer foods, hog farming. It also includes manufacture of animal feeds, glucose, soya products, and veterinary compounds, flour milling and pasta manufacturing, sugar milling and refining, and in renewable energy via the bioethanol and biomass cogeneration businesses. So the list is almost endless if you are going to name it. So despite this wide range of products class, the company still manages to operate in many countries outside the Philippines, including China, Malaysia, Indonesia, Vietnam, Australia, and New Zealand. So if you are going to think about it, there are wide range of food-related businesses that the Universal Robina Corporation engage. And how are they going to manage it? Diba, yun sa Manila na pagdalangan, dagkan makasira mga products. They even operate outside the country, including China, diba? Malaysia, Indonesia, Vietnam, Australia, and New Zealand. So, can a company, if you think about it, you can ask, can the company manage to keep up with such a fast-moving and wider-ranging industry? So classification class is the key. It is the main key. Classification is the main key for the orderly operations of a company. So back in 1954, it only had a single product, cornstarch. Mo yun na siya ang pinakaunang product sa URC. But look at URC now, diba? The business engaged in wide range of food-related businesses. And the only single product they had before in 1954 is cornstarch. And popularly, it is known as Gao. So it is produced in Pasig City. Of course, through the years, new brands were introduced and new factories were opened. URC products soon thereafter became prominent in groceries, convenience store change, and sari-sari store. So if it were not for its proper inventory handling, fixed asset maintenance, and strong cash and receivables management, all of the company's operation would have fallen into a complete mess. Why? Because imagine there are a lot of products that the company are engaged in. And if they don't have a proper inventory handling, fixed asset maintenance, strong cash and receivable management, if they really don't have classification of their accounts, then the company's operation would have fallen into a complete mess. Okay, so that is the story of URC. So there are 5 types of major accounts. So as we have learned from the previous lessons, that accounting concept starts from the basic equation. And what is our basic equation? We have asset is equal to liabilities plus owner's equity. But what actually makes up assets? So what actually assets composed of? What composes liabilities and equity? So things such as cash, plant and equipment, long-term debts would now enter into the picture. So all of these are components of one of the 3 parts of the accounting equation. It is called accounts. Okay, so in this topic, we are going to discuss the major accounts that are contained in the accounting equation. So what are the accounts that composes assets? What are the accounts that composes liabilities and owner's equity? So we are going to discuss that one today. And we are also going to explore the revenues and expenses, which are accounts representing some of the changes in equity. Okay, so let's start with assets. So we begin our discussion with assets. So we are going to analyze the first part of the accounting equation. It is composed of the following accounts. We have assets is classified into 2. We have current assets and we have non-current assets. So when we say current assets, it is an asset that can be realized 1 year after year-end date. So let's just say, for example, cash receivable. It is an account under current asset. Why? Because cash receivables can be realized or can be converted into cash 1 year after the year-end date. Let's just say, for example, December 31, 2000. The cash receivables should be realized in 2021, 2001. So that is current assets. All accounts under current assets is convertible into cash within 1 year. Okay? So current assets are all assets which are expected to be realized within the ordinary course of business or a span of 12 months. So when we say realization here only means that these assets are expected to be converted into cash, sold, or disposed after a certain time or through the passage of time. Okay, so when we say non-current assets, this is the opposite of the current assets. So Non-current assets, these are all other assets which are not current, basically fall into the definition of non-current assets. So take note that non-current assets, they do not need to have at least 12 months remaining before their expected realization. As long as they do not meet the current asset classification, they are classified as non-current asset. Okay, so what are the accounts under current assets? So first we have cash. We have also accounts receivable. We also have inventories. We also have supplies. We also have prepaid expenses. We also have accrued income and short-term investments. What are the accounts under non-current assets? We have the property, plant and equipment, intangible assets, and long-term investments. So let's go first to cash. Cash, what comes into your mind when you hear the word cash? It's all about money, right? So cash, perhaps it is the most basic and familiar of all the assets. It is generally classified as current asset. But did you know that cash not only includes money? Money class, it means that everything composed of bills and coins. So when we say bills, it is the mga pinapil nga money. When we say coins, coins. It is considered as legal tender, such as the Philippine peso in the Philippines or the legal tenders of other nations, such as the US dollar in Europe, euro. So cash, on the other hand, also class, it also includes money in the form of bank deposits in checking accounts and saving accounts. Also, it can include checks such as those provided by customers in payment for goods or services received. That's why we have under the cash, we have two accounts, cash on hand and cash in bank. And some companies also would include cash equivalents in the cash classification. So when we say cash equivalents, these are short-term investments which are considered subject to negligible changes in fair value and are maturing within 3 months from the date of their purchase. Okay, so it is important to note, class, that among all assets, cash ang number one. Cash is considered the most liquid as reflected by its ready usability through almost all transactions a company can enter. So the cash account is routinely monitored through the statement of cash flows. So again, cash is under current assets, and there are two accounts under cash, the cash on hand and cash in bank. And cash, this not only means that it is money that composed of bills and coins, but also it also includes cash equivalents like checks, bank checks, or those bank deposits in checking accounts and saving accounts. It can also include checks such as those provided by customers in payment for goods or services rendered. Next account, we have accounts receivable. So let's just say, for example, it is lunchtime at school, or let's just say recess. Suppose you're eating with your friend in a well-known fast food chain. As you both pay your orders, your friend asks you, "Hey, can I borrow some money? I will pay you later. I left my wallet in the classroom." So you agree, and with this, your friend now owes you money. While your friend has to pay later, you are on the receiving end of the money you lent him or her. So in accounting terms, you have accounts receivable coming from him or her. So just like what I have told you before, that if ikaw ang giutangan, you have accounts receivable. So that is accounts receivable. And also, class, accounts receivable are oral promises to the entity to receive cash at a later date. So it is an oral promises to the entity to receive cash at a later date. So they usually arise from normal course of business, such as selling goods or delivering services, but can also come from non-trade events, such as uh, you lending your friend. Those which arise from the normal course of business are called trade receivables, and those which do not are either called non-trade receivables or simply other receivables. So while they can be just as easily convertible as liquid as cash, definitely not all receivables can be collected, of course, because dili tanan mangutang sa imuha mo bayad, right? So that's why accounts receivable, definitely not all receivables can be collected. So companies also set up a contra asset account called allowance for doubtful accounts or bad debt allowance that estimates how much of the current receivables are uncollectible. Why? Because in your financial statement class, if you are going to put accounts receivable and you are not going to uh, set up a contra asset account, which is allowance for doubtful accounts or bad debt allowance, then you are expecting that your accounts receivable will be collected still. But you know that there are receivables that cannot be, not all, diba? You know that not all receivables can be collected. Why? Because there are really people that dili kabalo mo bayad sa utang, right? What if ang kanang nagutang sa imo namatay? So how can that person pay you? So that's why we are going as an accountant, you are going to set up a contra asset account. This is to estimate how much of your current receivables are uncollectible. For you to know that ay mo na lang ni siya ang akong accounts receivable. Why? Because namatay mo bisik kung dili na niya mabayaran. So I have to set up bad debt allowance or allowance for doubtful accounts. And again, that is the second account under current asset, accounts receivable. Again, accounts receivable are oral promises to the entity to receive cash at a later date. Okay? Trade receivables, these are normal course of business. So this trade receivables, this arises from the normal course of business. But to those receivables that do not arise from the normal course of business, then they are called non-trade receivables, or simply just put it other receivables. Okay, so let's proceed to number 3, inventories. So as I am saying before in the previous discussions, that inventories are all items that are available for sale. So as you look at a sari-sari store across the street, or if you have your sari-sari store, you look at your sari-sari store. Diba, you see a lot of items displayed on the shelves, such as candies, chips, canned goods, toiletries, soaps, mga ingana. And they are all ready to be sold. All ready to be sold. So these items are called inventory in accounting parlance. So ang imong mga baligya, that is automatically called inventory. Okay? Aside from these finished goods which are available for sale, inventory also includes raw materials, work in process items, and supplies. Okay, why? Because for example, you are going to make banana cue. So an inventory there is saging, di ba? Imong ingredients, work in process. So that is already an inventory because that is items that are ready to be sold. Raw materials class, it is an inventory because it basically inputs for producing other materials. So once they are entered into production but awaiting completion, they are called work in process items. So meanwhile, there are items which do not actually serve as an input for other products, but are nevertheless used during the production. These are called supplies. And finally, upon completing production, the end process are now called as finished goods. So let's just say, for example, you're going to sell banana cue. So what are the raw materials there? We have oil, we have banana, we have sugar, I think, di ba? That are the raw materials. So kung iwan na siyang giluto, that is now called work in process. Nagbukal-bukal na siya. And when we say supplies, these are items which do not actually serve as an input for a product. So let's just say, for example, sugnod. For example, let's say kalayo. Di ba? Ang mga seasoning. So they are called supplies. And upon completing, if you already done cooking your banana queue, then the end product is the banana queue is now called finished goods, and that is part of inventory. So in a chocolate factory, the sugar, the milk, cocoa are required for chocolate production. So the sugar, the milk, the cocoa, so they are called raw materials. So upon entering the production line, you mix na sila together, properly heated and cooled for hardening. At this time, they are not yet ready for sale as they still lack wrapper and packaging. So they are called work in process goods at this state. Indirectly, supplies are used in the process. This included oil, we're talking about sa banana queue. So we have oil for running the factory machine, cloth using for keeping the assembly line clean. Only upon being wrapped either in paper, plastic, and tightly sealed and bags would they be finally considered as finished goods, ready for delivery to the store near you. So that is inventory. So again, inventories are all items that are ready to be sold. And inventory also includes raw materials, work in process, and supplies, and also finished goods. So when we say raw materials, these are the ingredients or the things, the materials that are used to create a product. Just say, for example, sa chocolate, we have sugar, milk, and cocoa, di ba? That is to create chocolate. So that is raw materials. So kung isago na silang tanan, then that is work in processed goods because dili pa siya ready for sale. Kailangan pa man siya i-wrap, kailangan pa siya pabugnawon, kailangan pa siya i-shape. So that is work in process. So if the chocolate is ready na package na siya, that is finished goods. So when we say supplies, these are kalayo, sa oil, mga ingana. So that is inventories. And we also have supplies. So that is supplies. So supplies are these items that are being used for the operation of the business. It is not available for sale. Let's just say, for example, in your sari-sari store, you have inventory of notebooks and pen, but then there are one notebook and one pen there that is used for supply. Why? Because emotional listahanan ng mga utang. So it is not available for sale. It is used for office supply. So that is supply. Then we have prepaid expenses. Okay, so when we say prepaid expenses class, prepaid expenses is, let's just say, for example, rent. So you are simply paying in advance for goods or services anticipated to be received by the entity in the future. So that is prepaid expenses. So you are paying in advance. So let's just say, for example, a rent, you nag-rent ka. So nag-rent ka for good for 1 year, and then you already from January, you already paid the entire year of rent. So that is prepaid expenses. Nag-advance ka og bayad. So in your current asset, that is called prepaid rent or prepaid expenses. Okay, so we also have accrued income. So when we say accrued income, it is when we say accrued income, this is income that you already delivered. Or let's just say, for example, you're a servicing company. You offer services. And na-deliver na nimo ang service, wala pa ka nabayaran. So it is accrued income. Okay, that is accrued income. Short-term investments. Short-term investments accounts contains the company's investment in low-risk, highly liquid assets such as bonds and stocks. So the short-term investment class are expected to be liquidated in less than a year. Okay, so when we say current asset, this is a realization in the span of 12 months or 1 year. So when we say short-term investment, you are expecting that your investment expected to be liquidated in less than a year. So most often, short-term investments are entered into by the company to make the most income out of it. Otherwise, it'll cash. So this income is earned through interests and dividends and price appreciation. Okay, next we have non-current assets. So we have long-term investments, property, plant, and equipment, intangible assets, and fixed assets, or the property, plant, and equipment. So let's start. When we say non-current assets, these are all other assets which are not current, basically fall into the definition of current assets. So number one, we have property, plant, and equipment. These are also called fixed assets. So when we say fixed asset, this is property, plant, and equipment. So the fixed asset class are the most tangible, longest serving assets a company can have. So they are expected to not be converted into cash immediately and are regularly placed a means of production. So example of fixed assets, we have land improvements, we have also buildings, we also have machineries, equipment, furniture, and fixtures, and also kana sila. So they are also called property, plant, and equipment. So again, another name for property, plant, and equipment are fixed assets. So unlike current assets, kaning property, plant, and equipment like land, buildings, machineries, equipment, they are not usually consumable and are only used through utilization. Unlike sa current asset nga, mag-consume yun mo siya. So fixed asset, with the exception of land, also gradually deteriorate with the passage of time through usage. So except land, tanan ga depreciate. Land will never depreciate. Dili gid mo baba ang price sa land. While others, if magamit na nimo siya, syempre magbaba gyud ang yaang market value. So normal wear and tear, the obsolescence, so such as deterioration is more properly termed as depreciation. Okay, a form of an expense. So depreciation is a form of an expense. On a personal level, your mobile phones, laptops, and other gadgets can be considered as your fixed asset. Why? There are some things. Imagine if you're going to buy a phone, and then after 1 year, you decided to sell it. you cannot sell your phone na nagamit na niyo in 1 year higher than the price of your um, purchase cost, diba? The purchase price. So let's just say, for example, you buy iPhone 10 worth 25,000. You use it for 1 year and decided to sell it of 30,000. So if second-hand gani ang item, you cannot sell it higher than the original price, right? Why? Because you already use it for 1 year. So that's why your phone, if you're going to sell it, baba na gid siya sa original price. So that is what we call depreciation. So except for land ang always gamahal. Land ang dili gababa. And everything else depreciates. Okay. Next, we have intangible assets. So when we say intangible assets, in contrast to fixed asset, diba? When we say fixed asset, the property, plant, and equipment, it is the most tangible asset. But intangible asset, in contrast, it lacks physical substance and yet are similarly realizable over a long period of time. So what are the examples of intangible assets? These are assets that they cannot be seen nor touched. We just, for example, we have software, the Microsoft software. You can see that you have the Microsoft software, but you cannot touch it. That is that is an intangible asset. We also have patent. We also have copyright. Diba? You cannot see what is the copyright there, but you know that there is copyright. That is an intangible asset. We also have trademark. And so let's just say, so consider yourself as an example. Suppose this year, you have been able to finish writing your very first novel and being eager as an author. So immediately sold the book to your friends. So shortly thereafter, your novel becomes a big hit to your fellow students, and you are able to profit by selling the book to them. However, some of your classmates begin to photocopy the book and sell it to other people so they can profit themselves. Without a copyright, intangible, this can very much likely to happen. However, with your copyright, you can protect your book from unauthorized reproduction and hence be able to control the legal sales of the novel yourself, generating further economic benefits. So as you observe, if you go to libraries, there are really books that are not allowed to be photocopied. Naagid na siya because of the copyright. So also intangible assets decreases, but it is not depreciation, appropriately called, it is called amortization. So in intangible assets, they also likewise decrease, and it is called amortization. But in property, plant, and equipment or fixed asset, they also decrease, but it is also called depreciation. So we have an expense of depreciation and amortization. We also have long-term investments. So perhaps the most liquid of the non-current assets, the investments account includes all the company's investments, which it does not expect to realize within 1 year. So different from the short-term investments account, which usually includes highly liquid investments such as bonds and stocks, the investment account can also include other forms of investment such as real estate, long-term notes, government treasury bills, and funds set aside for long-term purposes. So have you ever heard the household terms such as SSS, GSIS, pag-ibig, or household contributions at home? So if, of course, we already heard that one, right? So from your parents' perspective, These are long-term investments. Diba? Kasi magkaghulog. And later on, they will be able to recover these contributions through pension, home discounts, home loan discounts, and health benefits. So, an additional with this one, we also have other assets. So, all remaining items which do not fall into any of the accounts mentioned above, like property and plant equipment, intangible assets, long-term investments, they are classified together as other assets. So this account serves as a catch-all for assets which are usually very much unique or hard to classify. So a practical consideration. It is favorable to limit the usage of this account to encourage more distinct classifications. Now let's proceed to liabilities. So when we say liabilities, this is the other side of the equation, liabilities and equity. So let us go through the various accounts of liabilities first. We also have the current and non-current liabilities. So when we say current liabilities, this is still like the current assets expected to be settled or paid out by the entity within 12 months. Okay? Paying out does not increasingly mean payments through cash, but can also include conversion and or refinancing. So number one, we have accounts payable under current liabilities. We also have notes payable, we also have accrued expenses, and we also have unearned income. So when we say accounts payable, it is the opposite of accounts receivable. So just like what I've said, that if ikaw ang nangutang, that is accounts payable. But if ikaw ang giutangan, that is accounts receivable. So while in accounts receivable, the entity is on receiving side. So in accounts receivable, you are on the receiving side. Nakaidawatunnon. The entity is now on the paying side. In accounts payable, ikaw ang mobayad. So as the borrower, it usually has to settle its accounts receivable within a year after receiving purchased goods or services. Take note that accounts payable contemplate only about borrowings involved in the company's production process. Accounts payable class is particularly helpful in an entity's cash management as it can help the entity lessen the pressure of a cash outflow by deferring cash payment or cash payment dates. So, however, class borrowing through accounts payable usually forgoes available cash discounts and the entity has to pay full invoice price. So, or an amount of a significantly lesser discount. Diba? Okay, if there are really borrowers nga ganan mo bayad og sayo because makalas man. Okay, next we have notes payable. So when we say notes payable, these are written promises of the entity to pay a sum certain in the future determinable time. So in notes payable, we have it is a written promises of the entity to pay a sum to pay. In the current asset, we also have notes receivable. Okay, this is also a written promises from the customer that they are going to pay you. Next, we have accrued expenses or the accrued liabilities. So this accrued expenses, other accounts which are the company should pay, so arising from the normal course of business throughout the operating cycle. It is very much possible that the company has already received benefits from certain events, yet has still been able to pay for it. Okay, for example, water and electricity expenses are incurred day in and out, but are only paid during billing due days. So water and electricity expenses, you already use that for the entire month and wala pa nimo siya nabayaran. Just say, for example, also the internet. Di ba? For example, LDT, sa Globe, di ba? Once a month lang ta magbayad. And nagamit na nato siya for the entire month, ay pa din ta magbayad. So that is accrued expenses. That's why it is under liabilities. Kay bayron nun pa man yun siya. Nagamit na nimo, wala pa nimo nabayaran. Okay? In assets, we have the prepaid expenses because that is wala pa nimo nagamit pero nabayaran na nimo. That's why it is prepaid expenses. Next, we have unearned income. So unearned income also class. It is also, let's just say for example, nagbayad na siya, wala pa nimo na-deliver ang imong services. Let's just say for example, magpalabada and then nagbayad na ka, nagbayad na ang imong customer, pero wala pa nimo nalabhan na yang mga gipalabhan. So that is unearned income because you still have the liability to offer the services para sa iya ang bayaran. So non-current liabilities, we have loans payable and mortgage payable and bonds payable. So when we say bonds payable, loans payable, these are from bank loan. Mga loan sa bangko nga will arise for 3 years nga binayran na, di ba? So that is non-current liability. Also mortgage payable. So it is still the same with the loan payable. Bonds payable, on the other hand, are even a degree more formal than notes payable. So bonds payable are a form of long-term debt, often in huge sums containing an agreement called as bond indenture. So that is the 3 accounts under non-current liabilities. Now we are now in owner's equity. So in owner's equity, we have the capital and drawings. So when we say capital, those are investments from the owners. Then drawings, these are withdrawals of the owners. So we have revenue and expenses. So when we say revenue, these are, so when we say revenue, this arises from the sales of goods, gain of other items, and income. So this is revenue. Kung is kaghalin, sales. When we say income, nagbaligya ka, anything na imong gibaligya or anything na interest income, that is part of revenue. So take note of that one. Revenue, the sales, the gains and income, that is part of revenue. So we have sales revenue, main source of revenue for business that sell products. We have service revenue, main source of revenue for business that render services like barber shops, accounting firms. Interest revenue, this is the end result of investment in debt securities. And we also have dividend revenue. So this is also an end result of dividend declaration of a company wherein a business has invested stocks. Okay, and also we have expenses. So utility expense, electricity expense, salaries and wages, that is also an expense. So this falls under expenses, and this is a deduction in the equity account. So we have chart of accounts. So the chart of accounts looks like this. We have the number 101, 120, muna siya. Account title, we have cash, accounts receivable, merchandise inventory, supplies, prepaid expense, prepaid insurance, land building, accumulated depreciation, buildings, equipment, accumulated depreciation equipment. So these are the description or the explanation of account. Okay, so let's just say, for example, cash. So we have debit or credit here. So may maibot ang 50,000. Always yun na siyang chart of accounts as 50,000 sa debit. So this is to increase the debit. So accumulated depreciation, this is contra asset account. So this is a deduction on the building. When we say accumulated depreciation equipment, this is a deduction to the equipment. Why? Because buildings and equipment, except for land, depreciates. Okay, so that's it. That is the this entire discussion for the lesson 5 and the first lesson of the second quarter. So thank you so much for watching, and God bless.